Are you tired of renting and dreaming of owning your own home? Think buying a home on a salary is impossible? Think again. In this video, we'll share expert tips and strategies to help you achieve your dream of home ownership, even on a modest income. From calculating affordability to navigating the mortgage process, we've got you covered. Let's get started! Today, we're going to talk about one of the most significant purchases you'll ever make: buying a home. For many people, buying a home on a salary can seem like a daunting task. However, with the right strategies and tips, it's achievable. In this video, we'll share some valuable insights on how to buy a home on a salary according to USA standards. Determining affordability, and the first step in buying a home is to determine how much you can afford. This involves calculating your income, expenses, debts, credit history, and savings. A general rule of thumb is that you can afford a mortgage that is 2.5 times your gross income. To calculate your affordability, you can use online mortgage calculators or consult with a financial advisor. It's essential to consider all the costs involved in buying a home, including the down payment, closing costs, and ongoing expenses like property, taxes, and insurance. Salary requirements. According to recent reports, the average salary required to buy a median-priced home in the US is around $114,000 per year, assuming a 20% down payment and a 30-year fixed mortgage. However, this amount can vary significantly depending on the location, with cities like San Jose and San Francisco requiring salaries of $150,000 per year to afford a median-priced home. Tips and strategies. Here are some tips and strategies to help you buy a home on a salary. 1. Down payment. Aim for a 20% down payment to avoid private mortgage insurance (PMI) and lower your monthly mortgage payments. However, you can still get a conventional loan with as little as 3% down. 2. Credit score. A good credit score can help you qualify for better interest rates and lower PMI rates. Work on improving your credit score by paying bills on time and reducing debt. 3. Mortgage options. Explore different mortgage options such as FJ loans, VA loans, and USDA loans, which offer lower down payment requirements and more lenient credit score requirements. 4. Down payment assistance programs. Look into down payment assistance programs such as grants, second mortgages, and deferred payment loans, which can help reduce the amount you need to save for a down payment. 5. Create a budget. Make a detailed household budget to identify areas where you can reduce spending and allocate more funds towards saving for a down payment and closing costs. 6. Get pre-approved. Get pre-approved for a mortgage before starting your home search to understand how much you can afford and to make your offer more attractive to sellers. Additional costs are when buying a home. There are several additional costs to consider, including 1. Closing costs. Factor in closing costs, which typically range between 2% and 5% of the purchase price. 2. Property taxes and insurance. Consider property taxes and property insurance costs, which can vary significantly depending on the location and value of the property. 3. Maintenance and repairs. Budget for ongoing maintenance and repair costs to ensure you can afford to keep your home in good condition. Conclusion: the buying a home on a salary requires careful planning and consideration of several factors. By following these tips and strategies, you can increase your chances of becoming a homeowner. Remember to calculate your affordability, improve your credit score, and explore different mortgage options. With patience and persistence, you can achieve your dream of owning a home. Call to action. If you have any questions or topics you'd like us to cover in future videos, please leave them in the comments below. Don't forget to like and subscribe for more content on personal finance and home buying. Thanks for watching, and we'll see you in the next video.